in procurement, you're going to be dealing with various entities. Some of these, and by entities, I'm talking about business entities, okay? So you're going to be dealing with various business entities. Some of these ones are going to be falling under private sectors. Some will be public sectors. And you're going to have others that fall under the third sectors, like, for example, the non-government or not-for-profit, okay? Those sort of the non-profit making organizations, right? Now, in level 3, module 1, which is what this revision series is all about. So this revision series is testing your ability to define the different types and functions of private sectors. Now, why are we doing that? Because actually that is the first assessment criteria in L3M1. Okay, learning outcome 1, that is. So in the learning outcome 1, the first assessment criteria requires you to differentiate, okay, basically to explain different types and functions of the private sector, right? And the assessment criteria in this case is for the procurement and supply environments. That is, again, as I said, L3M1, which has 4 learning outcomes, okay, and 12 assessment criteria. So we're starting with the first one. This is 1. So we're going to be looking at questions and answers, structures and all that, things that you need to pay attention to based on the various topics that fall under the first assessment criteria. And that is just a nice way of saying you're going to be doing 12 of these, okay? So that by the time you're done, like, there is nothing that phases you, okay? And there's nothing that sort of surprises you in that particular paper, the CIPS L3M1. Now, before we get started, let me just quickly point out that if you like some of these stuff sent to you in your email, make sure you're part of our newsletter, okay? The Zerate Network newsletter, and you can access, or rather you can join that by checking out the link provided in the description. So let's jump right in. Let's continue. And to start by understanding what you're going to cover and what are we going to cover in this case. Basically, by the time you're done with these, with all these questions, you're going to be in a position to, or rather these questions are going to test your ability to, okay, understand definitions and different types of private sector organization, right? So sole traders, partnership, all that stuff. Companies, incorporated and incorporated companies, SMEs, multinational corporations, okay? The size and scope of private sector in different economies, functions of private sector organizations such as profit, growth, market share, share price, and other financial measures, corporate and social responsibilities. First of all, you need to understand the different types of entities that fall under private sectors. That's the first thing. So look, with private sector entities, we're talking about 2 broad things. First of all, we have entities that are known as incorporated associations. These are the sort of businesses that have been registered, that have been incorporated, okay? Like a company. It's an incorporated association. And then we have, and by a company in this case, I'm talking about private companies, because incorporated associations, you can have public companies, you can have private companies. And since this is private sector, then it's, private companies. And then we have unincorporated, negative, okay? Unincorporated associations. And these are where you find things like the sole proprietors or the sole traders, the partnerships, right? So those are the sort of businesses where the owners of those businesses and the businesses are the same thing. Like if you run a sole proprietor, you and that business are the same thing. Meaning what? Meaning your debts are the business debts. The same goes for partnership, except now you are many people sharing responsibilities like losses and profits. But you people, okay, between 22 to 20, that is in my country, I don't know how that works in your country, but there's always a number, okay? Minimum to maximum, there's a maximum. So those people, in as much as they are different people, but their debts are pretty much the business debts. So the business debts are their debts, okay? Their liability towards each other can be limited, which is a whole thing. Like how much money have I put in? We limit how much money, how much loss I can incur. But I'm still going to incur a loss in relation to the business activities or a debt in relation to the business activities. So those are unincorporated. Those are things that you need to know. And so there are questions that revolve around those sort of things. Basically, knowing these sort of entities. Remember, this is not a lecture series, but a revision series. So let's jump right into the questions. And to start us off, let's look at questions testing your basic understanding of entities in private sector. Now, the first one here is, which of the following is a major characteristics of a business entities? Which of the following is a major characteristic of business entities that fall under private sector? Well, they are government owned. No, they're not. They are profit motive. Okay, so that's the thing, profit motive. They focus on social problems. They're funded by tax. No, they are motivated by making profit. So that's the answer. Okay. Number 2, or question 2. Which of the following is not a private sector entity? Well, a private limited, that's, it is. Partnership, still private. Municipal corporation, you see, municipal or county, depending on how you call it in your country. Like in mine, they just call them county. They used to be municipal. So nowadays, county council used to be municipal council. But so these ones are not private. They are public. So the answer is C. A franchise is just like a version of the same business. Like take something like KFC, McDonald's, Starbucks, and then you see all these outlets. So somebody, or even Shell, the petrol station. Yeah, those are franchises. So franchise is still private, right? So the question there is asking you what is not private. Anyway, let's move on to the other one. Which of these business entities is typically formed by 2 or more individuals agreeing to share profits and losses? Obviously, that's a partnership, right? So you're just looking for a partnership, and the answer to that is a partnership. Right. Because what happens in a partnership? You just don't share profit, you also share losses. You're thinking, what about a corporation? Well, in a corporation, people don't share losses, right? If you buy shares in a company, then what happens is that when the share price goes up, that's it. When the share price goes down, that's it. You just lose your money, the value. What you're losing is the value of your shares, all right? So you're not sharing profit, you're not sharing losses, just your share goes up. They might say, but when they give us dividends, yeah, well, they distribute dividends, a portion of the dividends, not all the profit, so that doesn't really count. Anyway, now, number 4. What is the main goal of a franchise as a business entity? So a franchise, is it to expand a brand? Is it to promote social welfare? Is it to outsource services? Is it to reduce tax? Nope, it's to expand a brand. You have a brand like KFC. I don't know, I'm talking about KFC and I'm probably hungry. Or McDonald's or Starbucks. Now I'm just talking about food, right? So, and then you see all these brands everywhere. And so that's the thing, right? It's just to expand the brand. I mean, it's a business to someone, but to the people who started it and to the people who are signing out all those franchise deals, they're just doing it to expand that particular brand. So it's still private. Notice, we're just testing things on private, right? Now, which of the following entities has ownership shared among members and the focus is on mutual benefits rather than profits? Interesting, right? Which of the following entities has ownership shared among members? All right. But then their focus is mutual benefit rather than profit. Is it a limited liability corporation? No. These people are so keen on profit. The fact that we talk about membership means you're automatically ruling out sole proprietorship. Is it partnership? Partnership, they still care about profit, man. That's why they share profit and losses. The answer is a cooperative society. Okay, so cooperative societies, very interesting in this case. Cooperative societies are actually an example of unincorporated association. I mean, it's a weird thing, or there is an interesting thing about cooperative societies. They are not incorporated like a company, right? But the members they sort of enjoy some immunity when it comes to things like debts. So the cooperative is the one that is going to be asked. It's like a circle. Okay, again, I don't know how you call these things in your country, but I'm certain you guys have a cooperative society of some sort. All right, like farmers association or vehicle owners, whatever, I don't know. So like the point is, let's just pull resources together, okay? And then from those resources, enjoy the mutual benefits, like farmers saying, yeah, how about you form a consumer, or other consumers say, how about you form a consumer block, and then you can buy organic products from farmers directly, as opposed to you going there negotiating on your own. Or farmers saying the same thing, form a block, sell our products as one. So that is an example of that. So all these questions are just testing whether or not you can identify those business entities that fall under the private sector. Okay, if you have a question, you ask as you continue. Now, in addition to just testing whether you can identify the business entities that fall under the private sector, the sole proprietor, partnership, corporations, and all that stuff, right? Or even cooperative societies, you can still be tested on whether you can identify the features of a particular entity or the features of these entities in general. Like, what are the features of a sole proprietor? I mean, think of it this way. Let's say you're dealing with, you're given a case. I mean, they're not going to give you a case, okay? But let's say somebody is talking to you and then they say, see, this friend of mine had a business, okay, a company, and then he got into a deal with these other people he supplied goods worth like $500,000 to these people. They didn't pay. He took them to court. Turns out these were like 35 people running a business that wasn't registered as a company, and my friend thought it was a company. So you see, that's a problem, because in most cases these people are 35, but rules regarding partnerships tend to limit it between 2 to 20. So they are more than a partnership, but they're not registered as a company, which means they are not a company. So what are they? It turns out your friend now has just been conned and he has to sue those people individually because the business entity doesn't exist. It's not a partnership. It's not a company. So those are the questions. Well, that's the concept of features. Like, do you know the features of a company? Okay, and by a company, in this case, I'm talking about a private limited company, because not public. We are not dealing with public sectors just yet, okay? We'll deal with those ones in the next video, which is the reason why you need to, look, is it a partnership? Okay, so, what are the features of a partnership? What are the features of a cooperative society? In fact, to understand that, let's just jump into the questions and see what is what. And there we go. So questions testing features of business entities in private sector. And what do we have? Number 1, ABC Designers, which is a clothing store, operates as a private limited company. Okay. The business needs to expand to other cities, and the owners intend to raise capital by offering shares to the public. What advice would you give them? And so the issue here is, are they even allowed to be doing this? Shares to the public. And now what do we have? Only public limited companies can sell shares. Okay. Private limited companies cannot publicly trade in shares. First of all, when you say only public limited companies can shares, no. So if you chose that one, no. Private companies can also sell shares. It's just a question of where are they selling those shares at, or rather to who. So private limited companies cannot publicly trade shares. Partnerships restricted. Partnerships restrict share sales. Well, this is not a partnership, right? So it's not even a sole proprietor. So the answer is B. The truth is, a private limited company can sell shares, but they have to sell them to private. So you sell them to your friends or privately. Okay. That is why if you watch programs like, say, Shark Tank or even Dragon's Den, they will say the deals are being made to the dragons or to the sharks, not to the public, because most of those ones are public. In fact, all of them are public companies. So then, private companies. They're not selling shares to you. Next, Jen is a boutique owner. Okay. Uses her personal savings at times to cover business debts. After a slow business season, Jane, a boutique owner, uses her personal savings at times to cover business debts after a slow season. What does this reveal about her business? Well, it simply tells you that the business is a sole proprietor. It's not any of these things, because she's the owner and she's using her own money to cover the business. All right. Well, partnership firm dissolves after one partner decides to retire. What feature of partnerships does this scenario show you? Simple. It tells you that with a partnership, if there are two owners and one is gone and now it's one, it's no longer a partnership. So there's lack of continuity. Okay. Limited liability, nope. Separation of ownership, nope. Scale, nope. So it's just the fact that it can't continue because if there are like 10, maybe it will continue. But for the most part, That's a problem with partnerships. An entrepreneur opens a gym and decides to incorporate it for liability protection. Why is incorporation beneficial to this person, to this entrepreneur? Are they avoiding taxes? No. They're just limiting their personal liability for business debts, because once they incorporate, the business and the partner becomes two separate things. And that is important for you to understand. Okay? Like with incorporation, if it is a sole proprietor or even a partnership, you and the business become separate entities. If you have any question, let me know. Let's move on to the next thing. Now, the other thing that you need to understand about these business, or you need to understand with these business entities, is that they each, okay, in the private sector, they each have advantages and disadvantages. They all have benefits, okay? A sole proprietor has its own benefits, a partnership has some benefits, a cooperative society or SACCO, whatever it is, okay, those third-party sectors, they have their own advantages, right? Although in this case, we're not really interested in third-party sectors per se. We'll talk about those ones. We just bring them up for you to understand that sometimes they can fall under private sectors, like a cooperative society, although they're not, right? So the questions in this case are just questions testing your understanding of benefits, okay, or advantages and disadvantages associated with any of those entities that fall under the private sector. So we're talking about questions that look like this. So in this case, questions testing advantages and disadvantages of various business entities. And what do we have? We have number one, a bakery owned by one person, that should give you a clue, can quickly adapt to changing customer preferences. Okay? So a bakery owned by one person can quickly adapt to changing customer preference. What advantage of such business does this illustrate? First of all, it's a sole proprietor, right? So is it shared? They're not sharing anything. Shared decision making? Nope. Unlimited liability? Come on. Sole proprietor? Very much limited. In terms of very much unlimited, okay? Full control by the owner, easy to dissolve, ease of dissolving the business. The advantage here is full control by the owner. I mean, yes, the business is also easy to dissolve, but that's not the reason why you're changing things, you're making changes faster. Okay? Your ability to make changes comes down to the fact that that business is under your control. Okay? I mean, unless the change was to destroy it or to dissolve it, but we're talking about customer preference in this case, okay? Changing customer preference. So the customer preference doesn't change so that you dissolve your business. So there you go. Now, number two, which of the following is a problem commonly faced by partnerships as a form of business? Well, are they heavily regulated? Not really. I mean, businesses regulations kind of just depends on what you're dealing with. They need a lot of capital to start. No, they don't. I mean, unless you're starting a big one. Decision-making conflicts. Okay? Business, is that it? The business and the owners, okay, in this case partners, are separate? Not really, they're the same thing. So it's a decision-making thing, because you are many. As the number goes up, then your ability to make decisions also become an issue, because each person has their own perspective about whatever it is that there's conflict. That's pretty much what you're saying. So a cooperative grocery, that's an example of an incorporated, right? So a cooperative grocery store faces slow decision making because all members vote on major changes. What is a disadvantage of this business structure? So that's the problem with these societies, associations, is that everything just comes down to, have we voted, right? So that's a problem because there is inefficiency due to democratic control. The fact that everybody has an opinion and you have to listen to their opinion, and that becomes a problem. Okay, so inefficiency due to democratic control, which is a problem you don't really get in sole proprietors. Of course, there's a problem with sole proprietors as well, but that's not okay. So which of the following is a legal advantage of an incorporated association, like a corporation, okay, can enjoy that an incorporated association will not enjoy? So it's simply saying think about it. It's something like a company. What advantage will a company have that your sole proprietor will not have, or that your partnership will not have? And there are several anyway. So in this case, what options are we given? We are told, one, share management. No, not really shared management, because I mean, if you have a partnership, you still share management. Limited liability, they don't pay well, they do pay tax. All businesses pay taxes. Flexible ownership, yeah, well, you can have that one with a partnership. So the answer is limited liability, which means what? Which means depending on the shares, the concept limited liability is interesting. It just says if A, okay, owns shares in A Limited, by owning shares, they effectively end up owning A Limited, right? So in that case, A's liability towards this company is just limited to the shares they've paid for. So if they've only paid for 3,000 shares, which are worth 10, so the value of their shares at that moment is, the value is not even that important at this point. It's just that 3,000 shares, that's what they've paid for. Then their liability towards that company is just limited to the 3,000 shares they've paid for. So if the company makes billions in profit and now it's paying dividends, then this person only gets 3,000. Now, if whatever 3,000 are worth in terms of dividends, in terms of debts, if let's say they've not paid for these shares fully, so they requested, okay, 3,000 shares, that is what was allotted to them, allotment. Now we are complicating things, but anyway, so that's what's, and they've only done 2,000, paid for 2,000, which means they haven't paid for 1,000. Then their debt towards that company is just limited to 1,000 shares they've not paid for. That's it. So their liability is limited to what they've not paid for. So that's a thing with that. Okay, that's the thing with that. If there is any question, you ask. Remember, the idea here is just for you to not only say, "Yep, I know private sectors, businesses." No. Okay, so you know them, you can identify them, but can you also identify the advantages and disadvantages associated with any of those entities that fall in that category? That is what you're being tested on here, right? So let's move on to the next one. And look, at any given moment as you're continuing here, if you have a question, you ask. You don't just be like, yeah, well, you ask. Okay, so let's move on to the next one. Now, your knowledge, okay, your knowledge of advantages and disadvantages of these business entities in the private sector can still evolve into questions that wants you to tell us, or that tell the examiner, okay, why a person might prefer incorporated association over unincorporated. I mean, why would a person prefer one form of business entity over the other? Okay, so then there are those questions. I mean, they sort of look like if they're still advantages versus disadvantages, but in this case, we're talking about incorporating as opposed to not incorporated, because mostly we'll tend to, I mean, as a business advice, you'll be told incorporate. Start a business. Yes, you don't have money, so start it, but then the moment you make enough to actually turn that thing from a sole proprietor into a partnership, go ahead and do that. So the question then becomes, why? Why would they push you to do that? So in this particular scenario, okay, rather in this particular part of our revision, we are just looking at questions that might test your understanding of why incorporation over unincorporation. And that means looking at questions like this. So questions on reasons for, preferring incorporated association over unincorporated associations. And here what do we have? Number one. So a community sports club wants to sign a lease for a new facility. Why would you advise them to incorporate before they actually go ahead and sign that lease? Now you might say, nope, I wouldn't advise them to do that. Just do what you've been doing, right? Or B, to protect members from personal liability. C, to increase membership fee, hence more profit. Like incorporate and then you're going to charge people a lot of money. That's pretty much what you're saying there. D, to avoid government regulations. Nah. So the answer is actually the liability issue. I mean, that's the key thing with incorporation. It's always you're doing it because we are trying to minimize our liability towards, rather in this business sense. 2, your local neighborhood association wants to apply for a government grant. So sometimes when you talk about government grant, you're talking about a situation where the government finances or at least gives money to some small businesses to help them with expansion or whatever it is, depending on the nature of that grant. So anyway, Your local neighborhood association wants to apply for a government grant, but such requires one to be a legal entity. What is the reason for that requirement? What is the reason for this requirement? Because it allows the association to avoid taxes. No. Because it makes the association a recognized legal entity. Because it simplifies decision making. No, it doesn't. It removes all compliance requirements. Well, B. It makes association, their association in this case, one that the government recognizes. Because once it's been, incorporated, now we know what that is. Look, some of these associations are just people coming together and saying, from now henceforth, we are going to be collecting garbage, or we are going to be making sure that people don't park their cars carelessly in the estate or something. But then, sometimes we want them to become legal. So go ahead and incorporate, okay? Or go ahead and become a legal entity, register, and all that stuff. 3, John is a sole proprietor who owns a barbershop, which is called John's Supercut. He recently purchased a car, which he intends to have registered under the business's name as part of properties that the business can own to help with debt capital. The idea behind debt capital is simple. It's like a loan. So basically the same, because he wants to use the car in future as collateral for a loan. So that's that. What would you tell him about that decision? Well, I'll tell him that A, ownership must be in his name and not the business. B, property law prohibits barbershop from owning cars. Okay? Banks require incorporations for loan. A car is not a good property for securing loans. Well, actually, in this case, it's a sole proprietor, and therefore the ownership must be in his name and not a business name, because John is a sole proprietor. So a sole proprietor and the sole proprietorship, basically the owner and the business are the same thing. So that will not favor John's position. He can't, because the business doesn't really exist separately from the owner. It doesn't have a different identity from that of the owner. Now, these questions were those questions that we've just talked about, were testing whether you understand, whether you can actually identify business entities in private sectors and the features, incorporation, and all that. But then they can still test you on these entities in terms of their size. In fact, we're talking about understanding size and scope of private sector in different economies. And the idea here is to know things like SMEs, okay? Small and medium enterprises. Like, what are they? Of course, you also have things like multinational corporations and all that. But SME is really one of those areas that people tend to ignore, because just say, okay, it's a small business, and then you leave it that way. So the questions here could be things like, right? So under SMEs, you could be asking, which of the following best defines an SME? All right. And a business with an annual revenue exceeding 500 million, that's $500 million, that's proper money, right? A startup company that operates in technology sector, okay. A business with limited number of employees and a moderate revenue size. A government-owned, we're not even talking about government in this case, right? So it's that. Although it's a bit vague when you say limited number, but the idea is few employees and the revenue is just equally small. Number 2. In which of the following industries can SMEs operate? The size of the business doesn't really matter, okay? The sector the business operates in doesn't matter. What matters is the size. So the answer is going to be basically all of these. They can be in manufacturing, they can be in retail, they can be in technology. So it's all. It's just an issue of are they small, medium enterprises? Okay? Small and medium enterprises. Which of the following is an advantage of SME, or rather, which of the following is an advantage that SMEs have over large companies that can help them to rather outperform such? Okay? Speed in decision making, raising large capital investment, nope. Conducting global operations, not really. Big companies are more capable of doing that than small companies. Compliance with international standards. Some of these small companies don't even know those international standards? So the answer is speed of decision making. Because of their size, they make decisions faster, and that becomes an advantage that they are going to enjoy. Well, knowing what SMEs are is one thing, but then there is also the question of do you know the challenges that those sort of businesses tend to face? And do you even have a plan for addressing such? So what are some of the challenges that SMEs tend to face? I mean, think about it. Small business challenges. What are some of these challenges? And so the questions in this case are just testing your understanding of those sort of things. And so what are we talking about? Okay, let's look at those questions. And in this case, you're talking about questions like, which of the following, okay, which of the following is the most common financial challenge faced by SME? Well, is it access to capital? Is it overtaxation? Is it lack of smart accountants? Is it employee retention? People are always leaving them. It is, because they're small, the answer is capital becomes an issue, right? Yeah, because look, if they're big, it means they have assets and they can just use that one in debt capital or sometimes even shares. Now, ABC Limited is a family-owned textile SME. The business struggles with employee turnover. Which category of challenge does this issue fall under? It's employee turnover. Meaning what? Meaning employees, they keep on leaving. These people have to hire new one, leaving, train, hire. So, that's the problem, right? They're not retaining employees. So is that a financial challenge? Is that a marketing challenge? Okay. Is that a technological challenge? Well, these people fall under operations. So that means when people leave and then you hire a new one and then you're just having operational challenges, because it's not like if you don't have money, we're not told why the employees are leaving. So let's not guess. But the one thing we know is that if employees are constantly leaving and then you have to hire a new one and then they leave, then you're going to have issues with your operations. So third one, number 3, a small construction company faces increasing employee turnover. Now we know what employee turnover is, right? We've talked about that one. What is a practical way to address this? Just reduce their salary so that they don't bother you. Reducing salaries, providing competitive benefits, okay, and training opportunities, delaying promotions to reduce costs so that even if they leave, you don't incur loss. Hiring only part-time workers. Look, if you give them benefits and you training opportunities, that is one of the ways in human resource. That is one of the ways of trying to retain your employees, right? So there you go. Those are questions dealing with small and medium enterprises. I mean, there are a lot of these things. We just come up with a few questions to help you understand whatever it is that you can expect in your exams. Okay, it's revision. And obviously, if you have a question, you ask. So again, you know the rule. You don't sit there with your question, right? So let's move on to the next one. Now look, let's sum these questions up by talking about the roles, okay? Or at least talking about the functions of private sector organizations. And the truth is, private sector organizations tend to play important role in the economy, like economic growth, okay? Employing people, innovation, technology. So the questions here are just testing whether you understand or whether you can separate roles that are played by entities that fall under private sector as opposed to those ones that fall under public or even third sector. And so that means in this case, you're going to be looking at questions that look something along the following lines. Right, so let's go ahead. Okay, questions testing your knowledge on roles of private sector organizations. And we have number 1, which of the following, okay, is a key function of private sector organization? And is it generating public goods? Come on, it's private, public. Number 2, achieving social equity or the equality? Nope. Creating economic value and generating profits? Yes. Because they're not enforcing any legal regulations. So the answer is C. Okay? They're all about economic and value and making profit. Next, which of the following shows how private sector companies contribute to economic growth? First of all, do they even contribute to economic growth? Yes, they do so. How? Because they mostly focus on international markets, which is a good thing. They create jobs and drive innovation. By relying on government subsidies, they ensure taxes are spent. By limiting competition from, look, they create jobs and they drive innovation. That's the answer. That's the thing there, right? So that's how they contribute towards economic growth. What is the primary motive behind private sector companies undertaking CSR initiatives? Okay, the corporate social responsibility. Why do they do that? Well, because they want to eliminate competitors, really, by doing CSR, right? So they decide to plant trees to get rid of their competitors. That's why you chose A. Then I didn't choose A. B, to enhance brand reputation and stakeholder trust. C, to minimize production costs. And D, to avoid government oversight, because if we look like you're planting trees, the government won't bother us. That's the idea there. The answer is because they're just trying to enhance their brand, basically brand reputation, and gain the trust of the people, okay, the stakeholders in those particular organizations. So that's the thing with that. Now, what have we done here? What we've done here is that we've just looked at 20 plus questions, okay? I mean, it's revision, right? We've just looked at the first assessment criteria. We just looked at over 20 questions. That the idea behind these questions was to put you in a position to define the different types and functions of the private sector, okay? And what was the objective of this? So the objective here of that assessment criteria 1, if you look at the indicative content, the idea here is to make sure that you are in a position to understand definition, okay, and different types of private sector organizations. Companies, basically understand companies, incorporated and unincorporated companies such as SMEs, multinational corporations, okay? The size and scope of private sector in different economies, functions of private sector organizations such as profit, growth, market share, share price, other financial measures, okay? Corporate and social responsibilities. Those are things that, you're supposed to know as far as assessment criteria 1 of the level 3 module 1, okay, CIPS is concerned. So yes, we've revised that. If there is any question you ask, remember, we're going to be doing a lot of this. So at this point, make sure you check, depending on the platform you're watching this from, right? So there are those questions, practice questions. Make sure you undertake those ones, test yourself. And if there is any question, as always, you ask. See you in the next video.